We talk about in franchising franchisability, feasibility, threshold analysis. And what a threshold analysis tells you is whether your business is franchisable, whether you should go to market with a franchise. There is no provision in the law in the United States and in most countries that tells you when you can franchise a business and when you can't. Quite frankly, every business can be franchised, but not every business should be franchised. And there are certain businesses which are wonderful operations, which we look at as a company, and we explain to the company owner that that business should stay as a company-owned system rather than being franchised. Most often it's because they don't have enough on the bottom line to sustain the additional fees that are required in a franchise system. What do we look for when we're looking at a feasibility, at a threshold analysis? We look at first at the prototype. Now, since I can franchise anything, I actually don't need to have an operating location. I can franchise an idea. But really, having an idea is not enough. The franchisor should be operating profitable businesses that the franchisee is going to operate. They should have done it more than once. They should have done it in more than one market. You do not want, in a successful franchise system, to think of your franchisee as a guinea pig. It's unfair to them. You need to understand seasonality and all the type of things, and the only way you understand the operating aspect of that business, who the customer is, what type of marketing works, how much labor you need, what the seasonality is, what the inventory requirements are. All of that only comes once you have an operating location. So having a prototype is the first step on a threshold analysis. You should be able to define the criteria for the locations, its layout, its interior decor, its exterior design and its signage. You should know what its construction and development costs are, its competition, its seasonality. That business has to have a brand personality. Unless you're operating a prototype, you don't even know if you can execute that personality. You have to know marketing, who you're marketing to, what are the best ways to market, when do you market? Do you market into a busy season, or do you wait until a busy season to start to market? You have to know what your pricing strategy is. Your brand, a brand that you recruit customers coming in because you're a discount house, or do you sell it at a premium price? There is a difference. Both companies are successful, but Timex has a different pricing strategy than a Rolex does, and it's appropriate. You need to understand the operating costs. You need to understand not just who you're going to train, but how much training do they need. You need to understand your supply chain. You need to understand a lot of things. And all of those things that you need to understand are coming from an operating prototype. You have to make certain that the business is economical, that even if the business is profitable as a company-owned location, will the prototype be able to sustain franchise fees and pay down debt in a reasonable period of time for franchisees? When will it go break even once you put in franchise fees? When does it go cash positive? Is it a reasonable period of time? Will that prototype business, once you've layered on fees required for the franchise system, will the return on investment be acceptable for each class of franchise being offered? Franchises isn't as simple as each location being run by an individual. If you're selling to a multi-unit franchisee, depending upon the class of franchisee that you're using in that multiple unit, they could be strategic franchisees, they could be investor franchisees. Is the return on investment acceptable so that they will make the investment? More important, will they make the additional investment to open up additional locations? Do you have a proven product or service? You could have a trend. You could have a fad. Fad businesses that are going to be around for 5 or 10 years and then vanish, they may be very successful franchise systems. You see them all the time in places like the yogurt industry, where back in the 80s there were 47 yogurt franchises. They went away. A couple of them survived. And today you're now seeing the yogurt business build back up, and it will go through a trend as any business will. But is it based upon a well-established consumer demand? Why is the hair care industry so successful? Why is the hotel industry so successful? Why is the QSR market so successful? They're successful because there's an established consumer demand for those products and services, and businesses are filling those demands. It's not a fad business, it's a trend, and it's a sustainable trend. Does it have a level of quality that distinguishes itself from the competition? It's not a matter of whether you're coming into the market into a saturated market or not. When Dave Thomas started Wendy's, McDonald's and Burger King had already exceeded 1,000 locations. Think of Five Guys. Five Guys comes into the market relatively recently. McDonald's has more than 20,000 locations at that point, and yet it has a great product that comes to the market. Think of brands like Firehouse Subs competing with companies like Subway. Subway is a massive company with units all over the world. Firehouse Subs today has 1,000 locations. Why? Because their product was different. It distinguished itself from the competition. It built up a consumer following for an exceptionally good product. Business will then have a high return customer base. You want to make certain that you own your trademarks, that you own your service marks, because you are going to license to the franchisee that mark. If somebody else is using that mark, it's going to get very confusing for your advertising and your marketing. Make certain that whatever brand you go to market with is a brand that you own. And if you don't, take a step back. You only have a couple of locations likely. Change your brand name. It's very difficult. It's very emotional, but it's an important thing to do, that you own your own brand mark, even though I can tell you that it's not a requirement under the law that you own the marks that you're licensing. But for brand confusion purposes, you need to do it. When we're looking at threshold, we're looking at feasibility. We can franchise anything, but there are types of businesses that lend themselves better to franchising. Sales of retail goods and services, very easy. Most restaurants, and I say most restaurants because you want to replicate the quality of the product. Therefore, when you're starting to get into the need for chefs, cooks are easy. Steakhouses are easy. When you're starting to do a French restaurant, that's difficult because replicating that chef is very hard. You want to have margins that allow for the fees and leave an adequate return on investment. You'd like an industry that has lower regulation, but at the same time, we're franchising today medical practices where there are a high amount of regulations. And what you basically have to look at is, how does the regulations impact the business? So if you're looking at a medical franchise and you're dealing with things like Stark laws, the fact that the doctor is not going to be able to share the patient revenue with you, is there a sustainable revenue level in practice management, in insurance, and other aspects? But lower regulation franchises are certainly much easier to deal with. You want a stable market, and you basically want a market with low technology. So it's not that the market's not complicated, but if the technology around that business is fairly easy, it's much easier to franchise that system because you can get to consistent, sustainable replication. And it's easier to replicate things with low technology than high technology. You want an operating system, so the business has to be based upon an organized concept. You need to be able to systematize your business and be able to codify it in manuals and training programs. The franchisee is going to be executing your strategy at a distance, independent from your day-to-day control. It's their business, so it has to be systematized. If you can't write your system down, it's very difficult to franchise it. Better to be simple to operate Because if it's simple to operate, it can be consistently executed. And your prototype should have been in business for a sufficient period of time so that you can project its future. One of the things we see frequently is companies looking to franchise, and the industry is already well developed. Think again of the hair care industry. The hair care industry, there's lots of mom and pop beauty salons. Obviously, people will go into their local beauty salon, local nail salon, and the industry looks like it's saturated with lots of competition. The truth is that a branded offering comes into the market, and in a fragmented industry like the hair care industry, it's one of the reasons that brands work so well. They suck up the consumer demand, and the consumers will now trust in a brand because buying from a branded location reduces in a consumer's mind the risk. There is a reason that people buy an Apple computer. There's a reason that people will buy a Dell computer. The reason for that is it reduces their risk than buying from a non-named, an unnamed brand. You want to be able to expand rapidly. If you are only thinking about opening up a half a dozen or a dozen locations in your system, if that's your goal, there are far better ways than going through the regulatory and all of the issues around franchising. So you want to have a business that you want to expand, but you want to make certain that your expansion goals are realistic. Don't look at the McDonald's, don't look at the Subways, don't look at the Five Guys, don't look at the Fantastic Sam's or any of the brands that have been around for 50 years with thousands of locations. You have to realize that the majority of franchise systems likely have today under 200 locations. So you want to make certain that you have realistic expansion plans. You also want to make certain that you can financially support the growth. And you want to be able to financially support the growth through your break even. Do you have the management bandwidth to support the franchisees? Or could you acquire that? Can you hire? Can you afford to hire the necessary management and operating people to support your franchise system? And will your brand survive in multiple markets? There are brand strategies when we're looking at companies that we recognize that that brand cannot work in a market, in certain markets. So there are southern brands which are exterior brands based upon a long growing season, or the brand needs an outside where it's warm. It just doesn't work up in Boston. Vice versa, if you're in the ski business, it's tough to be selling ski supplies in certain markets where there is no skiing unless you're going to be doing water skiing. So you have to make certain that your brand will work in multiple markets and that there are a sufficient number of markets which want your product in there. But don't think that your brand has to go nationwide. Very few franchisors successfully launch nationwide. Think of Dunkin' Donuts. Dunkin' Donuts is just now getting out to the West Coast from its Boston hub. They're just now getting into Dallas. They're just now getting into Las Vegas. And that's a brand that's been around for more than 50 years. They dominated their local market. They became a very large, basically regional brand. And now with those resources, they are ready, with a change in strategy, to expand nationwide and probably worldwide. Great product, but the brand needed to have the resources to now successfully compete against a Starbucks. Is your brand teachable? Is your system able to go to franchisees and teach them how to run and manage your business in a reasonable period of time? Sure. There are lots of brands out there which the franchisee will tolerate a long period of training. A McDonald's, a Domino's Pizza. Those brands recruit from the inside and people will be there a long time learning the business. But most franchise systems are teaching their franchisees how to run the business, generally in a couple of weeks, sometimes a little bit longer. But you have to be able to teach the franchisee how to manage the day-to-day of the business in a reasonable period of time. Understand that the franchisee generally, themselves, their management, some of their staff are going to come out to your headquarters. They're going to move into a hotel. They're going to be giving up their jobs. They're going to have expenses going out. And having them there for a long period of time, if they're not running a business which is generating revenue for themselves, is very difficult. So you also need to look at whether there's sufficient staff for that franchisee with the education and skills, and if it is a licensed or regulated industry, are there enough people with those licenses out there? Doctors, pharmacists, plumbers, electricians, tradesmen, that have the skills that's required. So you need to make certain that the underlying resources for the franchisees, including their staff, are there, and whether those people can be taught your system of delivery. Is the cash investment reasonable? Will the franchisee be able to raise the capital required to make the investment in your franchise business? Granted, there's SBA loans available, but is your business eligible for those type of loans and investment? Is your investment financeable? That's one of the major questions we have to deal with. Do you have serious cash flow deficiencies? Think of an average retail business that relies upon the Christmas season for most of their cash flow during the year and most of their profit. What happens to the franchisee that opens up in January? Wholly different cash flow situation from the franchisee that's opening up in August. The August franchisee has a couple of slow months as they're building their business, and then they get into the rush of the Christmas season and the cash flow comes in. Franchisee in January has to wait 9 months until that season opens. So do you have serious cash flows, and how do you deal with those cash flow requirements? Will the franchisee meet their return on investment goals based upon the anticipated classes of franchisee, including the period of time that they're expecting to break even? So you need to make certain that you can provide to the franchisee training, headquarters and field support. You need to be able to give them competent consulting advice on issues they're going to face. You want to make certain that your brand breathes and that you can look at product and service enhancements that not just compete with the competition, but make sure that the competition is trying to compete with you as you bring things to market. You want to evolve the business over time so that it is staying fresh along the way. You want to make sure that your franchise system is marketable. It is amazing how many times people call us up and they say that 50 people have come through the door and they wanted to know whether I'm a franchise. That's a very exciting thing to take place. There's a difference between somebody saying, "Are you a franchise?" and "I am willing to become your franchisee." If the only people telling you that your business should be franchised is your mom and dad, likely not franchisable. But at the same time, if people are coming in and saying, "Are you a franchise?" it's a great indication, but there's more that needs to be done to make certain that there's truly a market out there of people willing to invest. So you want to make certain that there's a sufficient number of potential franchisees that meet whatever profile of franchisee you need to have. So you're not selling a franchise to anybody, you're selling franchises to a specific profile of person that can execute your business strategy the way you want it. You want to make certain that that class of personnel has capital. So if you were doing beauty salons, well, there's lots of beauticians out there, lots of barbers out there that may want to invest in your franchise, but they may not have the two nickels to rub together that make $250,000 or $100,000 or a $50,000 investment in your business. So the franchisees you're looking for, you need to know what their profile is. Are there a number of them? Do those people have the capital? And most important, are they willing to invest that capital in your brand? Are you able to convince people that they should trust you and your brand, and that you are not just a pipe dream that's going to come down? So you want to make certain that it's marketable, and you want to make certain that it's so marketable that when the second group of franchisees call up the first group that are operating your business, they get the message from validation that your concept not only supported the fees necessary to provide them with a return on investment, but that it gave you enough resources so that you could provide to those franchisees the services, not just what you promised, but the services the franchisees needed to be successful. If you are not successful with your first group of franchisees, it is very difficult to recruit in the second group of franchisees, because the first group trusted you. They bought into the excitement. The second group of franchisees will call the first group to find out if the excitement was worthwhile.